Good afternoon, ladies and gentlemen. Once again, thank you very much for your attendance today. Seeing so many business leaders in the one room is fantastic. The vibe in the room is energetic, plenty of talk, but unfortunately it's my turn, and for you guys to sit back and enjoy the show. So today we've got some great presenters sharing their stories and some tips and ideas on how to support and grow your business. So first we'll open with our acknowledgements. So we acknowledge the Wonnarua people as the traditional owners, the custodians of the land within the Maitland local government area. We pay respect to all Aboriginal elders, past, present and future, with spiritual connections to these lands. I'd also like to thank Nimbler Digital. They're our video sponsor today. So if you don't know Nimbler, they do a lot of digital marketing and media, so catch up with the guys and see if they can help you. Magnetic Shots, Helen's doing a fantastic job, so she's a lovely lady flashing our faces. So also Maitland Mercury for advertising our events. They graciously put our advertising in there for free, so thank you very much for that. Tulloch Wines have been a great supporter of MBC with gifts for our speakers as well. We also like to thank Gay Aldler from Rap to You, from one of her fantastic gifts we have out the front, which she provides. And a special mention to our newest member, Declan Edwards from BU Coaching. Thank you, mate, for joining and welcome. And if we can help, let us know. So this brings us to our first speaker of today. It will be Brad Morelli and Emma Moss of Jirsch Sutherland. So as the economic centre of New South Wales, Hunter region, and home of the state's second highest population, it's not surprising that Jirsch Sutherland chose Newcastle as a location for its second office. The first reconstruction and insolvency practice in the Hunter region. Since partnering Lloyd Kerr opened, since Partner Lloyd Kerr opened the Newcastle office in '93 to provide local businesses and individuals with tailored insolvency services. It has grown in both numbers and presence. Today, Lloyd and fellow partners Brad and Stewart guide a tight-knit, hands-on team which is known for its extensive experience and expertise, strong local knowledge and relationships. So without further ado, Brad, would you like to come up? Brad and Emma. Round of applause for Brad and Emma.
Thanks, guys. Thanks for having us. Great to be back. We've attended a few of these now, and I think Emma and another one or Tina spoke, 2
months ago, so you probably don't want to hear from me. They probably want to hear from you.
Normally, as Shane mentioned, we're an insolvency and turnaround and reconstruction organisation. Some people would probably expect that we're extremely busy at the moment, but the opposite is the case. We're extremely quiet. So we've been invited along today to talk about some of the red flags or the issues we see and experience in our areas, and try and impart some tips or knowledge across to everyone. So we get started, Em? Yep. Cool. Do you want to...
Okay, so slightly age stats, but I guess, worst case scenario for any startup business is they end up knocking on our door, needing to talk to a liquidator and look at an insolvency. But there's some common themes that surround, the reasons why businesses fail, and listed up there is just some of the top 10 causes that, we see and is common across the industry. So most of those won't be a surprise to most of you. But really what we're trying to flag today is the lessons that can be learned from the situations that we've seen people find themselves in, so that hopefully you can all avoid these in your own businesses going forward. So most of these are easy ones, undercapitalised, often the case, massive underestimation of the cost of getting up and running, or the costs and the capital needed to get to profitability. Lack of a business plan is something we see an awful lot of the time. People going in with a great idea but not having the structure or the planning in place to underpin that idea, and it leads to problems down the track. The business runs the owner. Again, lack of planning, lack of systems, lack of structures all kind of come into that, and people end up just reacting and not having the infrastructure in place. Poor records. should be less of an issue now with clever cloud-based software. You know, the need for files and files of business records should be going away, but there's still plenty of people out there that just don't keep the records that they should be keeping. No profit target, again, ties into the lack of business plan there, cash squeeze and systems we've talked about in tax planning. Poor and inadequate management of resources, again, ties into the business plan and the structure and the planning and underlying issue of just not knowing what the break-even point is.
I think from an SME perspective, which I imagine most people in here are, and that's our space anywhere from the small sole trader to the larger SME. The key ones I think what we've seen would be undercapitalisation, that not appreciating how much money is needed from a work or cash flow perspective, and the lack of planning or knowledge or thinking. You know, people are doing their trade and not appreciating the other aspects of the business. As an SME owner, you are the whole business. One of the classics is quite common is someone will say, well, you know, that's the accountant's problem, they deal with that. Well, no, you're the business owner, you need to be across it. You've got people, lawyers, accountants and other professional service providers to help, but you still need to be on top of things.
So I guess we've broken down the kind of dangers that we're going to discuss today into the four kind of key areas of financing, statutory, operational and other. So financing up first, which are generally the big ones. These are the big concerns for people. Do you want to talk to these?
Yep, so somewhat straightforward but so often overlooked. The classic here is the unsecured versus secured director loan. So you have a business, you start a business, you maybe refinance your house or put some personal savings or your own savings or family or friend savings in to the business to get it started, and that's great, and you're up and running. And then down the track there's a problem, right? And just say the business fails. I'll say fails because that's our space. And you've injected these funds that they're effectively gone. You're just an unsecured creditor, just like any other creditor. Where a simple step to take at the start is to take security over the business in respect to the money that you put in. It's not hard. You get a lawyer to help you. There's a small cost up front, but it can save a lot of heartache down the track, because then if the business doesn't go as planned, you're in a higher position or a higher priority in order to try and recoup some of your money, right? And it's too late to do it, you know, when you realise the business is going bad and you put that money in, you know, 1 or 2 years prior. But it's one that we see so often, but is so easily fixed.
Especially in that SME space, you know, there often isn't that distinction between the company and the individuals. You know, people have remortgaged the house, drawn down on supers, another one we see often, to put the money into the business. It's sitting there as a loan, but by going through this extra step of having a loan agreement drawn up and registering the security in the same way a bank would if they loaned you money, it just protects your position in the event the worst case scenario happens. If it doesn't, then it, you know, doesn't make a difference, but it just gives you that protection as an individual if the worst case scenario happens.
Personal guarantees, I mean, again, no tricks here, but you're always recommended not to do it, but sometimes it's hard to get credit without providing it. And the one suggestion we would make is that you keep a record of personal guarantees that you sign, because you'll sign these forms and everything's fine until it's not fine, and then you start getting notices saying, hey, you've guaranteed the business's credit, please pay. So it's about being, you know, knowledge is power. So if you know what you've signed and what you've guaranteed, it helps with your personal situation. Same with cross-collateralisation and third-party security. So that's, for example, getting bank loans and then providing security over your house or your parents' house or a sibling or relative's property, right? Again, there's never a problem till there's a problem, right? And these things come out, you know, when times are at their worst. Difficulty accessing finance, pretty self-explanatory, and unscrupulous lenders, so short-term lenders, we're seeing an increase in this sort of stuff, higher interest rates, and a bit more predatory, right? Again, I keep coming back to this phrase, there's never a problem till there's a problem. Everyone sees the bright lights and the dollar signs and the success, but it's not always the case, and just being conscious of some of these things can limit your exposure.
And some of those less mainstream lenders can be less tolerant, less reasonable to deal with than perhaps your more mainstream, your banks, etc. So it can, cause you problems down the track. Like Brad says, the money can be attractive up front, but be aware of what could be a problem in the back end of that situation.
Cool. This is a classic, using basically the ATO as a bank, which I'm sure everyone's done at some point or for some period. Again, be conscious the ATO, whilst they're not overly active at the moment due to the current COVID experience and the government asking them to back off, they can be aggressive at times, and at the end of the day they are a creditor that you need to pay. It's just the fact that they don't knock on the door every day when you don't pay them, nor if you don't pay them, it's not as though they stop supply. Whereas if you're not paying employees, they're not going to turn up, or if you don't pay your trade suppliers, they're not going to provide you the goods. So the ATO is an easy one just to forget and think I'll get to them next time. And as I often say to people, you miss one quarterly instalment, that's fine, you probably catch up. You miss two, gets a bit harder. You miss the third, all of a sudden it becomes extremely problematic. Directors' remuneration, again, in SMEs, you're entitled to be paid, you should be paid, and you should be getting profit, but don't be excessive on it, especially in the early stages. Not so much in current times, but in the past I've seen people would start a company and nearly feel they have some entitlement to lease a BMW, right? Even though it hasn't actually done anything, right? You laugh, but it's true.
I guess to put that in context, Brad and I worked on a liquidation job where the company had not made money for a really long time, but the director was driving around in a Lamborghini.
Yeah. Fully entitled to, of course.
Yeah, which the company was paying for, and also taking a very large salary. On the flip side of that as well, though, do take a salary. Put a salary through the books, take it, report it as PAYG. If you are making drawings, if you don't report it through the PAYG system, it's not wages, it's treated as drawings, and you could end up with, potentially a debit balance loan at the end of it, which could be a problem for you. So, work out what a sensible salary is that the business can afford and what you can need to live off, and make sure that you do put it through so that you don't end up with problems down the track. Yeah, so these ones are fairly quick, but again, just things to be wary of. So we talked a moment ago about the, securing any loans as a secured creditor. Those registrations have statutory timing, so you have to lodge those security interests on the PPSR register within a certain period. If you lodge them late, you're potentially running the risk of it being challengeable. And also, you need to lodge that and do that paperwork at the same time as you advance your funds. You can't do that down the track, so just make sure that you're aware of that.
Again, it's not uncommon to see, as I mentioned earlier, people having put money into their company, things going pear-shaped and think, oh, well, I'll take security and that'll protect me. It just doesn't. You need to do it at the start. You need to do it properly. There is a cost. I don't believe it's excessive, but the level of protection you get is well and truly worth it.
So the next one's adequate insurance coverage, and this has come out of a couple of examples that we've seen in the last few months in terms of making sure that the business has the right insurances and registrations and things like that. Workers' comp we have seen being fairly gung-ho with a couple of people in terms of businesses that didn't have adequate coverage or no coverage, and therefore they're using their provisions to make directors of companies personally liable for workers' comp.
We had one exactly. There was an accident. The director either believed he had workers' comp or didn't realise that he needed it, right? Workers' comp paid out and then pursued the director to the tune of, I think, $100,000 or thereabouts. So he's now looking at bankruptcy himself, purely for failing just to make a simple phone call or an application online.
Again, tied into that, making sure you've got appropriate licences, registrations, accreditations, and that you're keeping up to date and current with all of those things. We have seen some of the regulatory bodies be really, really harsh on companies and individuals who've not kept registrations for whatever industry or area that they're in up to date, and it can end up being a big problem for people personally outside of the business. So make sure that you've done your homework in terms of what registrations and accreditations you might need, and that those are all kept current, and you've got the right supervisors, etc., if you need those people to run your business.
Directors' duties, again, it's pretty straightforward, but particularly in smaller SMEs, whilst it is, you are everything, the reality is you wear a number of hats. You're potentially a director, an employee and a shareholder, right? and each of those hats have different responsibilities. So you need to be conscious of acting in the interest of the company, your business, right? Not necessarily your personal interests, which may be closely aligned, but they may not be the same. And the other one relating to that too, and your company's bank account is not your bank account; it's the company's bank account, right? So paying Foxtel and groceries and taking money out at the club is not necessarily the best way to treat your company's bank account.
The next one, I guess, is always an issue. The ATO and reporting, they are a little bit, giving a little bit more leeway to people at the moment, but the ATO do have wide powers in companies to make directors liable. They can audit. We've seen them doing some audits recently, fairly, aggressive and fairly quick, and hitting companies with liabilities. So make sure that you are across what your ATO reporting responsibilities are. Lodgements are done on time. Again, they now have power. They always had the power to make you personally liable for PAYG and superannuation. That now extends to GST as well. So directors can be personally liable for a company's GST.
It's quite, my view on this is that the ATO is becoming too draconian because it effectively stifles entrepreneurship, which is for the greater good of the Australian economy. And they're just attempting to get more and more ways to pierce the corporate veil and make directors personally liable. And as Em said, as of 1 April last year, failure to lodge on time can put directors personally liable for GST, as well as historically they're exposed to PAYG and also superannuation.
And it's one of those that, the ability to make you liable for GST, it kind of got lost a little bit in among all the COVID craziness with, everything that happened last year. It's one of those things that should have been really widely publicised, but it just kind of went under the radar, I think, because the world went crazy just before it came in.
I think it's only company tax that you're not potentially have the risk of being exposed to personally now.
Yeah, it's only income tax.
Yeah.
Okay, operational ones, do you want to?
Yeah, we can. Well, there's no tricks here. It's just things that people often don't think about, and we have seen examples of all these. So again, diversification, again, very self-explanatory. Business structuring, as I mentioned before, whilst they're developing more and more ways or attempts to try and pierce the corporate veil, I'm still of the view, at least put as many barriers in front of you as you can. So yes, in my opinion, a company structure is better than being a sole trader because at least there's one element there in front of you, right, or to protect you. Succession strategy, again, this we do come across in terms of businesses that have been going for a long period of time. The directors have got to the end, they've sort of lost a little bit of motivation and drive, the business has matured, and it sort of just it tends to gradually decline and ultimately end up with us because they've failed to plan for some sort of succession.
We've spoken about the insurance point on the previous slide, so again, just make sure workers' comp, any other insurances, PI insurance if you're in that area. The next one is retention of title, so really important for businesses that are supplying goods and services or goods on credit. Standard clause often in terms and conditions of supply and of trade that you retain title to the goods until such times as they're paid for. The rules in this regard changed in 2012, so in order for that to be an effective clause, you need to have that registration registered on the PPSR again. It's an old requirement, but there are still a lot of businesses out there who supply goods on credit and don't have that registration, and therefore, if things go wrong, have got no entitlement to get those goods back, even if they haven't been paid for them. We dealt with a matter, 18 months ago? And again, loads and loads of big suppliers who really ought to have known about these provisions but didn't have registrations.
Having an ROT clause on your invoice just doesn't really carry any weight. It needs to be registered. And with the example Emma was talking about, there were, I think they were international suppliers, like quite large organisations that just didn't have their act together, and they lost tens of thousands of dollars worth of stock to the benefit of other creditors because they failed to register their interest.
Yeah, and you may not want the stock back, but it's better to get the stock back than to be left without the stock and without being paid for it as well. Again, it's a simple thing. It's a standard terms and conditions in your T's and C's, and it's about making sure that registration, I think it's about $20 or $25 to do the registration on the PPSR. It's a really, really small amount, so it's definitely something that is worth people looking at. Monitoring receivables is another one. Often, particularly in the SME space, people get busy doing what they're doing, out there running the business, doing the income earning, and don't stop to take the time to monitor those receivables and keep an eye on what's going on with the money that's due in. I mean, not every SME needs a proper credit control function and needs a credit controller internally, but make sure that you are putting that time in and finding that time on a weekly basis or a monthly basis or whatever that might be, just to keep an eye on those receivables. They blow up pretty quickly. Time can run away with you, and you realise that something hasn't come in that you needed. So it's always worth keeping quite a close eye on those ones.
Cool. Margins pricing, again, self-explanatory. And as I mentioned before, people go into business, they're good at what they do, but the things they're not, they tend to avoid. Again, and this is the numbers, and they rely on their advisors or accountant, for example. You need to be on top of this sort of stuff and be conscious of where your break-even points are, what your margins are, what you need to sell things for in order that you are making a real profit.
The next one may seem like a bit of a strange thing to say to you, but the danger of the big project is actually a real problem for SMEs. And we often see a scenario where you've got a business that's tracking along quite well, and then they get a customer that comes to them and says, I need you to do this really, really big project. And it sounds great, and there's a great income stream, so the business potentially gears right up to manage that project. But as a result of focusing on that project and diverting resources, quite often the key underlying business can be kind of overlooked in that period. And the big project might end, it may not be replaced with another one, and then you're left with the underlying business that had been keeping everything together, being a little bit neglected and perhaps not being in as strong a position as it was. So I guess
distraction is probably the word.
The distraction of that big project and focusing on that can take away. So just be mindful of keeping an eye on the underlying as well there, I guess, and don't be lured too much by the big project, which can come and go and then maybe cause you problems afterwards.
Long-term leases, again, these are all decisions you've got to make. Circumstances change, and tying yourself into long-term leases can present risk if you outgrow a place, for example, you need to move, but you're still tied in for another 5 years. It's
Okay. So other dangers, these are a few that just kind of don't really fit anywhere else, but other things that worth being there. As Brad says, in SME you're responsible, your job is to be across everything, but you do also need to rely on the external experts, accountants, lawyers, whoever that may be, to support you through that. There is a huge danger for startup businesses in not taking the time to take that advice and make sure that they are properly advised on areas that are out with their expertise. Rely on the professionals for these things, so make sure you are speaking to the right people about the right thing. There's an awful lot of myths and people that will tell you they know how to run a business and give you advice, but may not necessarily be the best people to be speaking to. So be conscious of who you're taking advice from and make sure that you're speaking to the right people.
The one thing I'd add there too, Em, is when you engage with your advisors, and it's probably not so much an issue for the generation in this room, but maybe the older, your advisors are just people as well. Don't take what they say with blind faith. Right, ask questions, engage. If you don't understand, get them to explain it in a more simpler way. I have seen a number of circumstances, and we were involved in a liquidation a number of years ago with an accountant and financial planner who basically stole millions of dollars from his clients. And when you sat with these people, they just took what he said with blind faith and just absolute trust and belief, right? So ask questions, get them to explain it, seek a second opinion, right? It's a pretty, I think this is a pretty important one. Prolonged litigation, again, the world is becoming more litigious. The court system, is not about equity and justice, it's about money. And it can also be a distraction. So we're seeing more and more over the years, people ending up in our offices because they've been caught up in litigation that just doesn't go away. It's continuing costing them money. The business owners now lost their focus on the business. The cash resources are drained. I don't know I have an exact answer to that, other than maybe avoid it where you can. Sometimes you can't. And commercial settlements, whilst they might leave a bad taste in your mouth may be the better outcome. Not to do the lawyers out of any work.
So again, the next one, the investment in non-related businesses, kind of ties into the litigation point in terms of the distraction. So investment, both in terms of time and financially, can, sometimes cause your eye to be away from the core business, and that can again be a bit of a problem for a startup or an SME business. So just be mindful of that. Not saying don't do it, but just think before you make those decisions to make investments that the business can sustain that both financially and resource-wise, in terms of not stretching yourself too thin with these things.
It's another distraction issue, isn't it? Mm-hmm. We've actually said at Jirsch, we have dabbled in other areas, and we always come back to, well, the only time we ever do make money is when we do insolvency. Anything else we dabble in just is a distraction and doesn't seem to work.
Out-of-date contact details, again, shouldn't be an issue, but it often is. Obviously, ASIC registers give directors' addresses. The ATO use that for service of certain key notices. Make sure that you are getting important mail. Make sure that your address details on your ASIC registers, if you're a company, or your address details with the ATO are addresses that you are actually checking the mail at and you are receiving it. It's not an accountant who you've not been with for a number of years. It's not a former business premises that you move out of. Make sure that you are keeping your address and contact details up to date with all of the relevant authorities and agencies, so that you are getting critical correspondence in a timely way.
Again, it's your business. You need to be on top of it. Take the time to check these things. Don't just rely on someone to lodge it with ASIC or whatever. Make sure the details are right. I had an example a few years ago where I was appointed over a development company that had, I think, a property in Western Sydney, unencumbered, so no debt, to the tune of $3 or $4 million. They were wound up over a debt of $15,000 on the back of not having the right address details on their ASIC documents. So all the notices that they needed to serve and lodge, it was all done properly, but the directors were completely unaware. I mean, they probably had $15,000 in the back pocket. They could have paid it, but inevitably it cost them, probably 2 or 3 times that much to put it all to bed.
Family breakdown, again, it's another one that no one hopes to find themselves in this situation, but unfortunately sometimes these things do happen, and again it can have that knock-on effect on the business. Again, sometimes a distraction issue, sometimes you end up with a business with management impasse because you've got a breakdown in a family relationship. So be mindful of these things. Try and have a plan in place to deal with situations like that, so that you at least have got something in place if you do need it, if the worst case scenario comes to pass. Okay. So, yep, last one.
Excellent.
So key strategies, again, what these will be will depend on your business, it will depend on what you're doing, it will depend on the size of your business, it will depend on a number of factors, but have something, have some metrics, some reporting that you do on a periodic basis to allow you to check in and see where you're going. It ties into the next one of talking about having a plan. Everyone has an idea for a business, but you need to have some kind of plan and strategy of where you're going to be at this point, this point, and this point, and have a metric to check that against, so that you can look in and say, okay, we're on track, we're not on track. Take the time to look at where you're going rather than just dealing with the day-to-day. It ties back to one of the issues we said at the beginning in terms of the business running the owner. Make sure that you take the time to actually step back and you own your business, and you make sure that you're tracking in the way that you want to be.
We see that when directors or business owners come into our office, it's pretty clear to tell the director who is all over it, knows is on top of everything, and the guys or the directors who are not with it at all, don't really have any idea, are just conscious of maybe what they're doing on a day-to-day basis, but are not over the actual operations of the business.
So the next one, I guess, is all about strengths and people. So play to your strengths, have the right advisors and have the right people. You know your business better than anyone, but you also know what your strengths are and what your limitations are. So play to those strengths. Make sure that you're doing the things that are good for you, and get other people in to do the things that you need to. So have the right accountant to advise you on stuff if needs be. Have the right staff to deal with the elements of the business that perhaps you can't add as much value in as they can. It's always often the case that you have to be across everything, but if you try to do it all, then that's often where problems arise, and perhaps your time is better spent focusing on one thing and delegating to someone else to look in other directions and take over and help manage other areas for you. So just play to your strengths with those things.
So have a plan for the worst case scenario.
Yep.
So again, it's probably a bit of a summary. No one wants to fail, but inevitably there are circumstances sometimes out of people's control that happens. So it's like your backup plan, and part of that is having in place, like we said, secure any money that you put into the company where you can. Be conscious of personal guarantees or personal exposure, and sometimes in SMEs people are quite emotional. It's their business, it's their life, but sometimes there's a point where you might stop. Don't necessarily drag the remaining equity out of your house, that you've worked hard for over the years to put into a business, and it may not actually solve the problem. It may just delay the inevitable. But just think about those sort of things.
So don't underestimate the resources needed. Again, comes back to one of the first slides that we spoke about in terms of undercapitalisation. I guess if the last year has taught people anything, it's that nothing is quite going to be as it seems or as you thought it was going to be. So just be mindful that when you are looking at your projections and your plans and what capital you're going to need, be realistic. Be realistic with what you think you're going to need. Be realistic with what capital you might need to put in to get there. Be realistic with what period you might need to defer salary or take reduced salary to get the business up and running, and make sure before you get into before you really go wholeheartedly into the business that you're comfortable that you can manage at home to live on a reduced salary for 6 or 12 months while you get this business up and running. Invariably, it takes longer, it costs more, and it uses way more energy than you would expect. So be mindful of that. Give yourself that opportunity, give yourself that chance to, have that little bit of leeway in there, and, cut yourself some slack as well. It is going to take time to get it to where you want it to be.
No, you can't do it all. Yeah. One thing I did want to add that we haven't touched on, again, from experience, SMEs employ people, they're the backbone of Australia. But one of the issues I've seen is business owners sometimes failing or not having the courage to make hard decisions. Businesses, for example, that might hit on some sort of tough times, not terminal, but heading that way. An example in place, an SME employs 12 people, right? They've had those employees for years. It's like a family, right? The owner is close, probably knows the kids. There's history. This is tough to grasp, but I think it's a very important point. That sometimes, you need to be cruel to be kind. So maybe in tough times, letting 2 people go, right, as hard as that might be, right, saves the other 10 jobs. We've just had too many jobs for us, or insolvency jobs, where people just can't have those discussions or make those decisions, and inevitably the whole thing falls over. Everyone loses their jobs. Everyone's in a worse position. Whereas if they'd made those tougher calls early on. And the reality is, when people get let go, and we know this from experience, Derby's Pies is one we did. I think 115, 105, anyway, a large number of people lost their job on that, right? And it was quite emotional. It was emotional for the owner, it was emotional for the staff. But I can tell you within days, maybe even the day they lost their job or the next day, people are getting text messages, getting offered jobs. Life goes on. It's not as though it's the end of the world. So, but it's just, I suppose, business owners being conscious of, part of business is making tough decisions, right? And sometimes that's actually good, for you, your business, and for the people who are left. Cool. I think that's us. How are we going, Shane? Yep.
Oh my God.
Perfect.
So, ladies and gentlemen, a round of applause for Brad and Em from Jirsch Sutherland.
Thank you.
Thank you very much, mate. Appreciate it.